Welcome back. Today we're taking a look at BarnBridge. BarnBridge, do the risk outweighs the rewards? And what's next for BarnBridge? Because we've got some interesting things to go through. What's really happened to BarnBridge recently and the bond token? Now, BarnBridge achieves an average risk analysis. Based on investor observed research, the proprietary system gauges how much a crypto can be manipulated by analyzing how much money it took to shift its price over the last 24 hours period, along with the analysis from recent changes in volumes and market cap. Now, the gauge is between 0 to 100%, with lower scores equating to higher risk, while higher value represents lower risk. This is a look at the bond token and BarnBridge overall. Look at the risk. Risk is relatively low actually. It's definitely in a positive area, but as you can see, the price has dropped off quite a bit, especially in the last month. Around the beginning of November, the price was above $5. Now the price is just below $4. It could go back above $4, but it's a bit volatile right now to say the least. But this is a token that's fallen by quite a lot. This is a token that used to be above $8, $9, relatively easy. The market cap currently sits at 37 million. Now this is quite fascinating for a crypto like this, especially because the circulating supply is so incredibly low, just below 10 million tokens in circulating supply. The market cap is incredibly low as well, so one could say that this crypto is undervalued. Now in terms of trade and analysts, Bond's current risk scores mean it's relatively moderate risk investment. Now let me just say, this video should not be taken as financial advice. It's strictly for educational purposes. However, investors' primary concern with risk assessment will find the score most useful in order to avoid a potentially seek out risky investment. Bond has traded 5.9% lower over the past 24 hours to its current price, just around $3.80. This shift has occurred while the volume is below its average level, and crypto market capitalization has risen. The cryptocurrency now has a market capitalization of course, 38 million. In my opinion, leaving it extremely undervalued. But for anyone who's wondering what BarnBridge is, I'll explain it in a quick summary. Essentially, BarnBridge is a tokenized risk protocol that allows users to hedge against yield sensitive and price volatility. It does so by accessing debt pools on other decentralized finance DeFi protocols and creating unique multiple assets within a single debt pool with varying risk return characteristics. Now, the platform offers investments in senior and junior tranches, where senior tranches investors receive fixed interest payments and the remaining proceeds go to junior investors who can max out at higher investment rates but don't have guaranteed payouts. And their token, of course, is a ERC20 token, so it's an Ethereum token and governance token to the native platform that is BarnBridge network. I've always liked the way how they designed their website. It is really easy to understand, really easy to navigate, and I just love their logo. And exactly what they do as a platform is very simplistic, and I think it's easy of use. It's easy for everyone to understand how they work. Now, long term, I do see BarnBridge going way above $5. Even $10 is understated. At a $10 price target, the market cap would still be just a little bit below 100 million. At a $100 price target, the market cap will be just below 1 billion. So you can see how easily this crypto can go from $3.75 to $5, $10, $50, $100, all while keeping the market cap below 1 billion. So yes, I still believe it's undervalued. But I think it's also fair to say that we are a long way from that. Now, Bond on Balancer and Olympus's Flex loans. BarnBridge DAO, that's a decentralized autonomous organization, recently deployed a weight pooled on Balancer with a 50-50 distribution of Bond and OHM tokens. This injected 1 million into Bond/OHM liquidity on the mainnet and will ensure that the market maker could act as a taker on DEXs to make markets on centralized exchanges across the mainnet and roll-ups for bonds. So why this fresh liquidity? With the Pool 2 rewards coming to an end, Bond will no longer have incentive liquidity on the mainnet. We had liquidity incentivized only for 2 years from the launch of Bond token, as we believe that we should be fairly distributed when that pool ends. But it is now evident that we need more time to see that happening. So that's just a quick explanation of what's going on. There's more information on BarnBridge version 2, that's the Q connection. Q's primary focus is to build deep, dynamic integration with leading DeFi protocols and empower users to interact directly with those protocols through Q Unified Interface. Now, Q will not only provide users with a clear overview of their crypto holdings across chain, crypto assets value, DeFi positions, NFTs, but will also allow them to directly open and manage positions in blue chips of DeFi without leaving Q.XYZ. Q's core focus will be institutional outreach and education. We believe that DeFi needs a transactional interface for institutions similar to Bloomsburg for traditional finance. Q aims to fill that gap in the market. And just to add, BarnBridge itself, it's decentralized open source protocol that brings sustainable fixed income to DeFi. With its novel mechanism, BarnBridge offers interest rate swap, allowing for any variable yield to be swapped to a fixed rate. Now, just a reminder, if there's anything that I missed, leave it in the comments so we can have a discussion on that in our next BarnBridge video. But let me know, do you believe like me that BarnBridge is indeed undervalued and it can easily go to $5, $10, $25, all while still being undervalued? $10 still under 100 million in market cap. So I hope you enjoyed this video. Thank you for watching. Subscribe to see more, and I'll see you in our next video.